Hey, good afternoon, everyone. Okay, let's just jump right into it. Not a whole bunch of new news. Traders are just continuing to digest the kind of the macro political events that are going on, and as well getting to the tail end of harvest, where maybe we're starting to see some of the farmer selling start to dry up a little bit, and people just start to look more towards demand and the realistic picture of where we're at. So here's November soybeans look really pretty good, right? We got finally back up above this high right here at 1305, which has been plaguing the market for a couple of weeks. I would expect us to pop on up in here and come challenge these higher levels on beans. I don't see anything that would prevent that. It is coming up to the end of this contract, so we need to start looking out a little bit further. I'm not going to do that here on this video, other than to say that see these lows right back here. The January and the March contracts are both further advanced in their move up off of these lows. So, and we're starting to see the bull spreads work here as well, where the front month is gaining on the back months. So, I would expect that to continue to be the way. I think there's a chance, potentially that beans will even start to invert in the nearbys, and that is just indicative of a small crop and of big demand, which is starting to show itself in the marketplace. So continue to be patient. Yes, our risk is lower, but if you don't have reownership on and some type of strategy out into March or even May, then I think you're leaving money on the table. I think we've got to get reownership on in these markets. I think this could get really, really powerful. Here we are with a 1, 2, and now up we go into this big count. Yeah, I think we've beat that to death. But if you haven't gotten that full analysis, here we are in November beans. We're contained within parallel lines. This is 61.8% of wave 1 move, which is the most common retracement for a wave 2. We have proportionality in depth here between A and C, which would be A, B, C. We have proportionality in time. We have proportionality in depth, all contained within Fibonacci parameters. We have a 61.8 retracement of wave 2. And this fits into our broader perspective as well. We have divergence on the lows down here, and we have a big, nice move up. I think beans, all systems let go, look like they're ready to rock and roll up and out of here. But obviously, price has got to do its thing first, and it's got some more work to do. We got to get up above 1317. We've got to get up above this little shelf right here at 1322. Then it's got to work its way up. So day at a time, and we'll see how traders want to take the November contract off, and then we'll look to for further strength into the new year on beans. So reownership, in our opinion, is important. Okay, here is the December corn contract. I've left the cloud on here. You can see where we are. We've consolidated now inside of it for 4 days. We're starting to get a little bit of strength. This is a teeny tiny little bullish engulfing day. Corn only traded a 5.5 cent range today, so there's not a whole lot of anything you can talk about on this chart, and the volume isn't great as well. But overall, it's what we should expect, coming off of lows, coming our way back into the daily cloud as we propel our way up and out of it for higher prices. Keep an eye on this $5 mark and the 506, 507 level. If those can get broken, then all of those shorts are buried, and it's probably going to ignite some short covering. So we're looking up in corn. I don't see any reason not to. Oil has been all over the place today, but currently it's up almost $2, $1.90, and I don't see any reason why that would stop either. Margins are strong. Guys are going to keep buying it, and we're seeing basis strength. Frankly, it's surprising. It's the middle of October, and we're seeing basis up significantly across the board, with rumors of much higher prices than even what we're being indicated. So we'll just have to be patient and see what happens. Okay, and wheat, the one that just won't go. Like it tries to rally every day, then it just gets turned around and sold. Again, I don't see any reason to change the analysis here. If corn goes and beans go, wheat's not going to stay down here. There's just no way that it takes another leg lower if those other things happen. And if it does, that's just a buying opportunity in our opinion. So I'd be super patient with wheat. Obviously, if you want to move into an option strategy here, that's fine. Otherwise, I just buy more futures and wouldn't really overthink it, because you've got a clear exit point after this big consolidation period, and you've got these divergences that are in effect. So remember, in trend following, consolidation favors continuation, except for in divergences, when even a continuation is a quick short pattern where it spikes and then goes. But with these kinds of divergences, with everything else we're seeing, I would continue to hold wheat and not overly overanalyze it. Okay, it's 5 minutes. That's all we need to do today. We'll be back with you either tomorrow or Friday, depending on what the trade action does. But I like what we see. I don't see any reason to be changing anything that we're doing. I think we just sit and be patient, and I think we'll be rewarded for it with higher prices sooner rather than later. A war is a terrible thing. Nobody likes to see it happen, but our job is to figure out how it's going to impact prices. And I don't see the downside to escalating hostilities from a price standpoint. So we're gonna trade it accordingly and try not to let emotion get in the way of that. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. We will talk to you guys either tomorrow or Friday. Have a great night. See ya.